good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. For now, the market continues to be in the red. It's a bit lower than what we had seen earlier. So we're at the level of 24,770. But the good news is that we haven't broken below the mark of 24,750. And as compared to what's happening across the globe, it's a prettier picture. Yes, it's red on the screen, but at least it's not down 4-5% as is the case with the Japanese index, or a cut of over 2% as is the case with a lot of Asian markets as well. In fact, talking about the global markets, we should mark what's happening across the globe in terms of Europe as well, because they have opened with a cut of anywhere between 0.5 to 1% lower. Asia, of course, closed with a cut of anywhere between 2 to 4%. In fact, the Kospi was down well over the cut of almost 3.5%. And the rates coming in from US right now in terms of the futures are not very, is not very something which is giving confidence, because Nasdaq futures are down 320 points. Dow futures also staring at cuts for around 220. Now, in that context, you have an HDFC Bank which is batting for the bulls today. In fact, that's one of those stocks which are actually holding one end of the market. It's still up 1.5% right now. And then, of course, you have other buzzers in the trading session, the likes of, Divi's Lab, which is up 2%, and Dr. Reddy's, which is up 1.3%. Sun Pharma doing quite okay. So pharma as a pack is holding okay, but can't say the same about autos, because Eicher Motors is down a solid 5% as we speak. You also have Tata Motors seeing a cut of 4%. Maruti is coming under pressure. So autos are clearly on the back foot, while pharma is doing okay. We have Rudramurthy also joining us on the show right now. Rudramurthy, hi, good to be speaking with you. Let's begin by discussing the market texture itself. How much of today's fall should be attributed purely to what's happening across the globe? And would you be a bit worried that this could be the start of a bigger correction in the markets?
Yeah, good afternoon, Anisha, and thanks for having me in the show. See, first of all, after this gap down open today, we have fairly done well compared to even our Asian peers. Markets are definitely holding. But however, we are very, very stock specific and also sector specific. Nifty for me, 24,400, 24,500 is a strong support. So this correction might lead to Nifty going to those levels of 24,400, 500, where one can look at buying Nifty, and Bank Nifty for that matter today is definitely way outperforming Nifty. That is because of support what you have from HDFC Bank, and also I feel the private banks which had underperformed now for last 1 to 2 weeks might have some amount of catch up and outperformance. So for me, yes, Nifty can correct to levels of 24,400, 500 from here. Bank Nifty can outperform. Markets will be very stock specific, and you have to be in right sectors and stocks at current level. Wait for dips to buy the index.
The only good thing is that we haven't fallen as much as the rest of the globe. I mean, I'm just looking at Japan, that knocked down over 2,000 points, right? Hong Kong was down about 350 odd points. And even the US futures, like Anisha was just flagging off, they're not indicating any amount of recovery. So in that context, we're relatively better. But do you sense there's more weakness to come perhaps in the coming days? Because much unlike the past weekdays, we've not seen a recovery.
Yeah, we've not seen a recovery, but we've not fallen also that much, at least in the context of, as you rightly mentioned, across the globe. And I think that's a very comfortable sign for a trader to try and carry on the positions, if it's on the long side or even if it's on the balance side, because, when the market doesn't exhibit too much of an extreme or a heightened volatility, when, things are taking a turn of sorts for global markets, that generally is a sign that markets are going through a grind or a consolidation. But I also believe that we are also into a zone where the markets on every dip or a correction should be bought into. I think from a short-term perspective, 24,500 marks broadly, I think would be a very good support point. So if in case the global markets, say over the next 1 or 2 days, gets into a sharp correction, then I would probably believe 24,500 mark, if that gets tested, should be taken as a good buying opportunity.
Right. Okay. So let's discuss some of the individual stocks as well. While HDFC Bank is the resilient one today, as is a Dr. Reddy's, Divi's, Zomato, of course, continues to react to its numbers and hold on to its gains. Jubilant Foods, IEX, Granules has been a very strong mover all through this week. That also continues to hold out. There's Naukri, which is higher by about 5.5%. But lots in the red as well, and especially, Kunal, autos and metals as a trend. Do you think now for autos, even after the good earnings, it seems like all of it was baked in already, I guess?
Yeah, I think autos is a disappointing set, especially after today's price action move, because many of these auto stocks Eicher Motors specifically, that stock is looking a bit, in fact, much more weak on the charts. It's breaking below its, major support 100 exponential moving average, 50 DMA for itself. So a lot of supports being broken for the stock. A reversal in the likes of Tata Motors after a very steep rally from 1000 levels or 1020 odd towards a 1150, 1170 mark, where the stock had tested last week or so. So I think when we look at this kind of a price action, it generally indicates that maybe the better part of the price action rally for many of these auto stocks could now be behind, and we could be looking at these stocks maybe getting into a gradual consolidation. But then I think, since the markets over the last few weeks have been more of sector churn and sector rotation, it's very much possible that if the auto stocks continue to show signs of weakness, there could be some of the other larger cap sectors which may try and balance it out. So I think what we need to wait out for is, in terms of sector churn, maybe auto stocks could be, a place where traders could look to start booking out, profits, especially on the larger cap names, and then start to allocate more capital towards banking and potentially into the IT stocks.
Okay, point taken. Talking about autos, you of course have, Eicher Motors as well as Tata Motors, Maruti Suzuki, which is down. But Escorts is also coming under pressure, down about 5.5%. We did speak with the management earlier in the day, hear out what they had to say about the growth outlook going forward, because overall there has been a weakness that we have seen in some of the select numbers. Let's hear out what the management of Escorts had to tell us.
Generally, the volatility levels, I think, will go up, and we already seen the improvement has happened, especially in the southern investment zone. And those are the markets which are more dependent on lanes for irrigation. So for them, I think the season will pick up, and we should see the next 2-3 seasons actually good. Even if the water, if the rainfall has an issue next year, which is not likely. I think looking at the condition, what we hear from the weather agencies, that next 3-4 years should have a good rainfall. So we expect the industry should continue to do well. So cumulative basis, we still a soft running regime, so it's not major impact on the commodity side. If something comes up, then definitely we'll have to take a call. But otherwise, looks like the margins should be able to sustain at the level, I think, which we are in across all three businesses.
The word coming in from Escorts Kubota, Bharat Madan, highlighting what the future visibility is like. That said, Kunal, where is the hiding space right now? Because from what I see, it's some bit of pharma and HDFC Bank and Kotak.
Yeah, I think pharma stocks are the ones which are looking quite okay. And what I like about the pharma pack is that, in the best of the market times, or in the times when the market was rising on high momentum, even at those times, you saw the pharma stocks doing pretty well. Sun Pharma, Dr. Reddy, they were one of the better performers from the larger cap pharma names. Of course, other names were Cipla and Lupin, which have also managed to chug along quite well. But even in the volatile or the consolidative times, we've seen pharma stocks managing to outperform, which means that there's a classic sector trend in the making for these pharma stocks. Cipla, Lupin, I think at current levels also looks attractive. From the mid-cap pharma name, Kaplan Point is something which is looking attractive. Glenmark Pharma, which is something which has come back into a breakout mode, that's another chart which is looking attractive. Biocon, the stock has been taking support at 355, 360 mark. So I think, again, I think the stock has tapped back into this support territory. So good levels to enter into Biocon as well.
Okay, so that's the top recommendation within pharma, but just looking at the rupee, that's taken a knock for another record low level. 83.75 is what we are seeing. Money market has been fairly active. In fact, the bond rates have been falling for 8 consecutive days, and that's the reason there are these increased murmurs and clamor of perhaps a bit of a slowdown and a risk-off mode, and risk-off is exactly what is playing out in the trading session today. So rupee taking another tumble. It's positive essentially for export companies and IT service companies, but let's see how it moves from here on. But I also wanted to put the spotlight on Info Edge. Of course, part of the reason why that stock is reacting since the start of the trading session is the fact that Zomato is up 11-12%. In fact, Zomato had hit the market capitalization of almost 2.5 lakh crore rupees earlier in the day. So, of course, Info Edge holds a part of it. So that stock is reacting to that. But there's an incremental news flow as well, which is positive. And those graphics will come up for you on the screen. The Naukri JobsPeak Index data is out for the month of July. And it's a very solid showing that they have actually reported. Look at that number. Overall, on a consolidated basis, there's an increase of around 12%. Most of the sectors have shown good growth. So FMCG is up 26%. You're seeing a 40% plus kind of growth when it comes to AI as well. This is the first positive growth that the company or the JobsPeak Index has reported in this year. And most importantly, it's GCC and IT, which is doing the heavy lifting. So IT is up 17% year on year. And that is giving hope to people that perhaps that hiring has bottomed out. And from here around. It'll be a way forward for the entire, hiring space. And that's why yesterday Team Lease was also quite active. And today you have Info Edge reacting to that. We will discuss this in a bit more detail. But for now, Rudramurthy, what will be your take on Info Edge as well as Zomato? Would you still make fresh bets despite the run-up?
Levels of around 6,850 is now a very strong support. After a long consolidation, what it has made, today it is making that breakout above levels of around 7,200. And then volumes also on today's price action has been very, very positive. So for me on chart, Naukri is definitely a good buy at current level. You can in fact keep buying it on dips to levels closer to 6,850. Have a stop loss of 6,800 and ride this up move. I won't be surprised to see this stock moving towards 7,800, 8,000 zones positionally. Definitely a very, very strong buy. And when it comes to Zomato post its numbers, yes, this stock first gave a breakout at levels of around 180, then made another consolidation, then again broke out from levels of around 225, 230 zone. Again, today's price action has been with strong support of volumes. So for me, any dip in Zomato to those levels of 230 from current market price is a buy. So definitely Zomato is also on the buy list and it can reach those levels of around 280, 300 very soon. So dips to 230, 240 is a good buying zone for Zomato now. And Info Edge even at current market price is a great buy.
Okay, on that note, we're going to take a very quick break. Eris Life Sciences numbers, and seems like operationally it's a great set. You can see the stock is well recovered, just that bit, or actually fall and then recover from there. We'll analyze those numbers, but after this very short break. Back with closing trades right here on ET Now, and still under pressure, though relatively better than the rest of the globe, like we've been marking out. But we're still down over 200 points on the Nifty and haven't seen any recovery. In fact, now we're scaling lower, pretty much trotting around the session lows. We're down almost 300 points in the Nifty futures now at 24,735. Pankaj Murarka as well joins in on the show to talk about the fundamentals. We will get to him in just a short while from now. But yes, while pharma, some of the select private banking names seem to be the only saving grace, lots is bleeding within the broader end of the market as well. Cummins down about 8%. There's Escorts, which is down about 6%. And then, of course, Godrej Properties as well, lower by about 4.5%. That said, I think it's important to keep a close eye on what's really happening with the global markets at this juncture, because you are seeing a bit of a slip when it comes to the US stock futures as well. After Amazon posted its numbers, traders are now bracing for the July payrolls report. In fact, the Dow futures are down another 255 points, and this in addition to the mammoth fall that they had overnight already. 1% lower for the S&P futures and another 300-point knockoff coming in for the Nasdaq futures as well. But that said, Kunal, tell me how some of the global charts that you map are looking like. Anything in the US that's indicating that there could be more global weakness?
So I think only the Nasdaq chart was a bit of a worry, because I think the last one week or 2 weeks, there was a tad bit of underperformance which had creeped into Nasdaq as compared to the likes of Dow. So there was this price comparative study where Nasdaq was outperforming very strongly over the last 6 months to 1.5 odd year. But somehow over the last 1 to 2 weeks, we've seen Nasdaq clearly underperforming. So Dow has been maintaining the 40,000 mark broadly over the last 1 week or so. But Nasdaq had seen a corrective phase of more than 5% odd from its recent swing highs. So that generally indicates a classic underperformance which has creeped into the index. But many of the other charts were as it is going through a struggle. So for example, Shanghai over the last 3 to 4 months was going into a corrective phase already. Dow was one of the stronger ones. European markets, FTSE, DAX, etc. These indices were also going through their own phase of minor consolidation or a minor correction. So nothing major in terms of a reversal on the equity markets chart, except for the likes of Shanghai, which is reversing, and Nasdaq, which has started to underperform.
Point taken. Just wanted to highlight the numbers of UPL because that's taking a bit of a knock right now because it's a lot more weaker than what we anticipated. The losses have actually widened and they've come in at around 384 crore. We were expecting a number of closer to almost 200 crores. So there's a miss as far as the bottom line is concerned by almost 100 crores right now. That stock has taken a bit of a nosedive. Even in terms of the top line, the revenue from operations have come in at 9,000 odd crores. We were working with a number of 8,700 crores. So on the top line, it's not as weak as anticipated, but there has been clearly something amiss within the operating performance of the company because the profitability, or rather the losses, have been more than what Street was expecting. One of the reasons could perhaps be that other income has come off a bit. We are looking at an other income of 98 crore. On a sequential basis, this number was around 126 crore. There is an exceptional item though of almost 49 crores. But last quarter too, there was an exceptional item of around 105 crores. So we'll have to do the deep dive as well and analyze what went wrong with the earnings of UPL, because it's been very flip-flop for the entire industry as a whole in terms of the chemicals. And we will shortly get the presentation out of UPL wherein they talk about the guidance, and that will be the key which will decide the way forward for the stock. For now, down about 2% for UPL. Pankaj Murarka is with us now. Pankaj, let's begin the discussion with chemicals itself. We have been waiting for that recovery. Last couple of quarters, we have been calling that perhaps this is the worst, this is the worst. There will be recovery in a couple of quarters. But is there really light at the end of the tunnel?
Well, as far as chemicals are concerned, I think the sector has gone through a severe, massive, meaning slowdown in global demand, and there's been a destocking at the customers. And on top of that, there's been a slowdown in China and Europe as well, which is impacting global demand. And on top of that, we've seen price corrections as well. So I like to believe that we are near the trough as far as the chemical cycles is concerned, but it's still some time before we see an uptick in the sector as a whole. But clearly what I'm seeing is when you look through some of the companies which have announced their results, the earnings are finding a trough. We've had earnings which contracted by about almost 25-30% for most of the companies from their peak earnings 2 years back. So probably now earnings are settling down and finding a trough, probably, but I think it will take a while before we see an uptick.
Details that I'm getting on UPL, the net debt has increased by $639 million in Q1 versus the year end that we had seen in March. So for the company, debt is, as it is, something which has been a problem, and the company has been trying to bring it down. They've done a couple of restructuring to do that. The seeds business has faced headwinds on account of the weather challenges, is what they're saying. Overall, the volume was decent with a growth of 16% coming in, but there's a price erosion which is underway. So the price has eroded by 14%. There's a net debt which has actually gone up. So that is something that we are watching out for. And overall, the management is saying that the India crop business, they continue to make efforts to restructure the business through the strict credit policies and tighter credit terms. The contribution margins and cash flows have improved from the India business. You're also, the management is also talking about how the impressive growth has been seen when it comes to Europe region, because I think the growth there was almost 10%. The herbicide performance in Brazil also did well. So there are pockets which have done well for them, but there's definitely that miss coming in on the bottom line, Asha, which means that the stock is right now down almost 3%.
Yeah, almost 3%. Although having said that, the street was just about turning the corner around for some of these chemical names, and you did see some bit of buying actually kick in after what looked like a very, very elongated lean patch. Pankaj, what do you have to say about looking at how disappointing UPL's numbers have been?
I haven't had a chance to look at those numbers in detail, Aisha, but I think the global agrochemical cycle is going through a downturn. And there are price pressures. We've seen sharp erosion in pricing in global agrochemical, and there's been a bit of overstocking as well. So the companies are experiencing destocking, which is where sales momentum is low. So I think UPL, being a global agrochem player with presence across the world, will see all of this trend will reflect in UPL's numbers in that sense. And on top of that, clearly UPL has a significant leverage on the balance sheet. So the operating deleverage and the combination of operating deleverage and financial leverage just makes the downturn much more painful for UPL, I would guess.
While autos, of course, clearly seem to be the weakest link in the market right now. Escorts down about almost 6%. Eicher as well taking quite a bit of fall. That stock lower by about 5%. Similar is the case with the Tata Motors, Maruti, M&M. In fact, M&M was, remember, the top drag on the index even yesterday, even though the numbers were above estimates on all counts, and that was the case with Maruti and today with Tata Motors as well. Do you think, Pankaj, the market ran up ahead of earnings, at least in the near term, and perhaps that's what explains the weakness in the auto names?
Yeah, absolutely, Aisha. I would think so. We've had a ferocious rally in the markets. All of us know the last 15 months. The post-election rally has also been very sharp. I think there's nothing wrong fundamentally with the underlying economy or broadly with the numbers that we have had so far. They're pretty much in line. It's just that the markets have been a bit too ahead of earnings, given the strong liquidity flows and momentum that we've seen. So probably it's a time for markets to pull back a bit and spend some time or consolidate some time. I think broadly, directionally, earnings momentum and economy remains in good shape. So probably a pullback or some consolidation be should be healthy for the market from a slightly more medium-term perspective. So I think any pullback in that sense should be a good opportunity for long-term investors to step in.
Okay, point taken. So that's a view coming in on some of the auto companies. What do you make of the platform companies, Pankaj? And you've been tracking the likes of Zomato, Paytm quite closely. Were you impressed by the kind of show that Zomato delivered yesterday? And if at all, do you think it's priced in, or do you think this is a blue sky territory now?
No, I think the numbers have clearly surprised us on the upside, and now everyone realizes that while Zomato, the food delivery business, has become profitable for a while now and has been growing phenomenally well, but over the longer term, the bigger value will actually emerge from quick commerce business, which in case Zomato's case is Blinkit. So I think the combination of both these businesses, the numbers were really phenomenal. It's like hitting the ball out of the park. And more importantly, the visibility for growth continues to remain very strong over the next probably not only short or near term, but also from a slightly more medium term to longer term perspective. So I think the business is on a very strong footing. Obviously, valuations are rich, but the point I'm trying to say, or I always said, is in case of these companies, one, there is a very significant high operating leverage. So the revenue growth, a high revenue growth actually amplifies your profit growth. And secondly, these businesses, given their low penetration levels and incremental or significant increased consumer adoption, can sustain that high growth for a long period of time. And more importantly, some of these businesses have now started demonstrating pricing power. If you see in case of Zomato, they've increased platform fees, which was zero almost a few years back, to almost, I think, 5 or 6 rupees that we've started charging most of the cities. So that's a reflection of pricing power these businesses are demonstrating. So I think these businesses have a long, long runway for growth.
So you're saying at 264 also it's a good buy for the long haul?
Absolutely, I think so. Eventually, I think some of these quick commerce players, the future of organized retail now is quick commerce. Some of these quick commerce players, be it Blinkit or maybe Instamart from Swiggy, whenever they get listed, probably will become as big as the largest retailers in India. And in this context, that businesses are still very small and they have a very long runway to go.
Right. Okay, Pankaj, stay with us. Lots more to talk about. We're going to quickly take a very quick break and come right back, discuss the markets on the other side. Right, back with closing trades right here in ET now. UPL continues to react to its numbers, not just operationally, but the fact that debt has also seen an uptick. That's sizable. The stock still tanking about 4% as we speak right now. Auto still under pressure. Pankaj, if the market were to fall a little bit more along with the rest of the globe, what should one's shopping list be like?
Well, Aisha, I continue to remain very positive on IT. I think we're coming out of 2 years of cyclical slowdown in IT as a sector. And I think probably we are seeing initial signs of revival in IT spends globally. And probably once rate cuts set in US, probably starting September, we'll see that trend accelerate because global companies have been holding back on IT spends for a while on fears of US recession. And probably once those fears are put to rest and we start seeing rate cuts, I think we'll see acceleration there. So IT looks, and in the context of overall market, I still think valuations in IT are reasonable versus a lot of other pockets of markets. So that looks interesting. Apart from that, pharma or healthcare as a sector continues to look pretty decent because earnings there continues to remain very resilient, and there's incremental scope for margin expansions in the sector, especially coming out of US generics business for most of the companies which are focused there. And valuations still are reasonable in that sense. So healthcare is another sector which looks interesting. Probably, I would also expect probably in the second half of this year, we should see a revival in discretionary consumption in India, because we've had a very sharp slowdown in consumption over the last 5 or 6 quarters. But I think probably we'll have the benefit of low base and probably a normalized monsoon helping agriculture and come into the second half of the year. So some of these consumer-related stocks which have underperformed over the last year and a half, they probably could be another interesting pocket of the market in that sense.
But given an option, Pankaj, would you be a subscriber to the Ola IPO?
Well, I think it holds a lot of promise from a slightly more medium to longer term perspective. So probably we'll rather wait for it to get listed and probably see how things play out before taking before investing into it. But I would think it holds a lot of promise, because it's very clear that probably we've already reached some sort of inflection point where 5% of two-wheeler sales now are EVs. And usually it's been the experience that once you get to 5% number, you see a very sharp uptick in that number, or the adoption increases very significantly. So I think the two-wheeler adoption of electric vehicles or electric two-wheelers in India has reached that inflection point. So I think over the next 5 to 10 years, we will see a significant increase in the penetration of electric vehicles within the two-wheeler segment. And Ola, if they execute well with their product suites and sales, probably they can they have a fair chance to be a meaningful player in the space.
So seems like it's a subscribe coming in if you're a long-term investor, and of course, if Ola is able to deliver on their promises. Thanks, Pankaj, for making time and speaking with us. Rajit Sharma also joins us on the show right now. Rajat, hi, good to be speaking with you. What do you make of the strength today that we are witnessing on the likes of HDFC Bank, Kotak Mahindra Bank, etc.? Is it finally the time for them to outshine?
Yeah, good afternoon. Thanks for having me on the show. So, I'll first give a disclosure. I don't have any of these large cap private sector banks in my portfolio. That said, for once, I do agree that HDFC Bank, Kotak, IndusInd, all of these banks are actually at a price where, you could consider adding them to your portfolio, at least in an incremental way. So we are doing that. And the reason is two things have changed for these banks. First is that, if you see historically, they've not been trading at the kind of valuations they used to trade about 5-7 years ago. An HDFC Bank, which consistently traded at around 27, 28, 30 kind of price earnings multiple, is today available at 18. The other thing that's happened is that, RBI governor has been talking about credit growth being a problem, and, low CASA deposits at these banks. So credit deposit was a little skewed. And I think with the latest budget where, there is no advantage of investing in debt funds from a tax perspective, a lot of investors and institutions in particular who were parking money in debt funds, which were, very tax advantaged, that money is likely to move back into the banking. So, the banks would have a lot more raw material to extend and, give out advances. So I think that will change for these banks. So now if you see the overall banking space, when you compare private banking to PSU banking, which has run up a lot, the PSU banking, I do believe that stocks like Kotak and HDFC, which have basically given about 30-40% return in the last 5 years, these are now available at a very good price point, and you should start adding them slowly. So I think what we're doing is we're going back to the drawing board, moving away from a lot of these overheated stocks, especially in PSU and defense, and coming back to what I would call as a core portfolio, which is your large cap private sector banks. One theme that I'm really positive on is FMCG, again a sector which has not done as well as the market. So that's my broad view on the market.
Where would you be taking off profits if the markets were to fall further?
Taking off profits if markets were to fall further. So, if you're not sitting on any fixed income or cash, if you're not invested in fixed income instruments, if you don't have money to buy into a dip, then definitely do that. Having said that, I've been sitting on a lot of cash positions for almost 6 months now. So, today my portfolio is around 38 to 40% debt across clients. We deal with different clients, but overall, broadly, if I see my total asset size, a lot of it is already dry powder. So I would suggest taking off profits, not waiting for the dip, taking off profits now, but to the extent incrementally invest in equities. That's where I'm saying you should, what you should be looking to do is sector rotation. And I think sectors which I like a lot are, again, now private banking looks attractive. FMCG is where we've done a bulk of our buying, whether it's Asian Paints or Hindustan Unilever. ITC, which reported numbers, they were pretty flat, but I think there would be a lot of value unlocking in the next 100 days as hotels business gets listed. So these large cap stocks in FMCG, private banking, and even for that matter, IT. Don't compare it with what's happening in US, where a lot of the IT stocks, particularly Nasdaq, went up. A lot because of the whole artificial intelligence boom. If you look at Indian IT stocks, which are still very traditional, legacy businesses, you have an Infosys which is available. It's got a dividend yield of around 2.5% right now. So that's again a sector where you should look at adding. So basically, frontline stocks from sectors which are fine available at reasonable valuations and moving away from PSUs, defense, and a lot of these things which have run up a lot.
Just wanted to talk a bit more about UPL because the presentation is out, and interestingly, they haven't given any update with respect to the FY25 guidance. So I'm not sure whether I should read it that they are maintaining the guidance and there's no change to that, hence they have not updated it, or that they have taken it back. That's just something to watch out for, because in the earlier presentation that they had given at the end of Q4, they had talked about 4 to 8% revenue growth. EBITDA growth was expected to be over 50%, and the operational free cash generation that they were likely to do in FY25 was $300 to $400 million. Right now, we don't have any fresh update coming in with respect to the FY25 guidance. But yes, there is an incremental comment about FY25 wherein they are saying we continue to focus on margins, the benefit of which is expected to get more pronounced in the second half of the year. Our focus is on cash generation, and that continues, and we're optimizing our inventories and other working capital items. So they are saying that they're working towards it, but as of now, they haven't given any fresh numbers for us to talk about as far as the FY25 guidance is concerned. So that's about UPL right now and the kind of updates that we're getting from the earnings there. But talking about earnings, we have a whole host of them lined up for later today as well. Titan, of course, will come out with its earnings. Let's take it across to Vinny to get a sense as to what the expectations are. Vinny, the stock is at the highest point of the trading session. Any recovery that we're anticipating as far as the jewelry business is concerned?
Yes, so the jewelry retailer Titan is expected to report its numbers. We're expecting a revenue growth of around 5.5%. Profits expected to be quite muted this time, while margins expected at 10.2% versus 9.9%. Jewelry division, which accounts for almost 80% of their revenues, that's expected to see a growth of around 8%. This time, what the impact was coming in for the jewelry business was that the wedding season, there were lesser wedding days, as well as volatility in the gold prices is something we are watching out for. Jewelry EBIT expected to be lower due to studded sales being lower because lesser wedding seasons. We're expecting watches and wearables to continue to see a good growth. Obviously, the company had come out with its Q1 update, so we have a fair idea of what to expect across segments. Eyewear segment 10% growth, watches, wearables around a 14% growth is what we are watching out for. Watch out for demand trends in Q2. How is that shaping up in terms of commentary? Profitability across segments, what's the trend there? As well as what is the competitive intensity and product mix one is expecting going forward are key factors to watch out for from Titan.
Okay, and Vinny, tell us what to expect from Britannia's numbers as well.
Yes, so Britannia is set to report its numbers. Now, in terms of expectation, we're expecting a revenue growth of 5%. And in this, there's a pricing cut that Britannia had taken as well. So, volume growth are expected to be at 7% because there's a negative pricing cut. So, pricing growth will be negative, but we're expecting volume growth of 7% this time around. Now, obviously, price cuts is something that must have aided the shares. Market share of the company is what we are expecting. So, market share gains will continue from Britannia even in this quarter is the expectation. Some bit of an adverse impact due to the harsher summer that one could be watching out for, because that was dampening the hot beverage, and in turn obviously biscuits is something that could have seen an impact as well. Margins 18.3% versus a 17.2%. Margins are going to be aided. Why? Because there was a soft base last time. So because of that, an 18.3% is what we're expecting the EBITDA margin at. Let's watch out for commentary, especially in terms of market share, commodity outlook, as well as what is the pricing action they've taken in Q1 or expectation in Q2 is what we're watching out for. volume growth as well as the Hind belt, rural versus urban growth. How is that shaping up? Are key factors to watch out for.
Right. Rudra, what's looking like a better defensive bet? Is it the obvious pharma, which seems like a good hiding place? Or would you say some of the FMCG plays as well are looking good?
See, for me, definitely private banks are much better at current level. If someone wants to hide in this fall, I would rather go for might be Kotak Bank, HDFC Bank, Indus India Bank. These are all stocks which are very close to their very strong support, and even valuation wise, I have comfort in them. So, for example, HDFC Bank, see the outperformance today, and also support is at around 1636.40 zone, which is very strong. And even in public sector bank, for that matter, you have to be very stock specific. Stock like PNB, for that matter, around 117, 118, we have a very, very strong support. SBI at around 840 offers a great risk reward to go long. So if I have to hide in this market and buy every dip, I'll be looking at buying number one HDFC Bank, followed by Kotak Bank, ICICI Bank and Indus India Bank. And when it comes to PSU banks, I'll be picking SBI and PNB, because all these stocks at current level offers great risk reward to go on the long side, and their bottom is very much protected and they're very close to long support area.
Talking about banks, SBI is all set to report its numbers tomorrow. Let me take it across to Snehi, find out what the ET Now poll is pricing in. Snehi?
Well, yes, all eyes are going to be on the biggest PSU, SBI, coming out with its Q1 numbers. Let's take a look at what the street is factoring in when it comes to this PSU bank's numbers. On the standalone basis, let's first talk about debt interest income. That's expected to come in at 42,292 crore rupees, which is a 9% uptick coming in on a year-on-year basis. PPOP, which is the operating profit, is also seen at 25,698 crore rupees, which is an uptick of 2% year-on-year, but a drop of 11% sequentially. Now, when you talk about provisions, that are being seen at 3,197 crore rupees, coming around this time 28% higher year on year, but almost double on a quarter-on-quarter basis. So watch out for what this number looks like. And net profit also expected at 16,786 crore, which is a drop of 1% on a year-on-year basis, a 19% cut coming in sequentially as well. Now, when we talk about NIMs, NIMs are likely to moderate 3 to 4 bips sequentially to 3.27%, somewhere around that number, due to tight liquidity. Employee cost is likely to normalize this quarter as well, but other income and fee income is likely to remain weak. Thereby, PPOP is expected to grow 2% year on year. Now, Q1 is seasonally weak for agri loans, thereby slippages are likely to increase to roughly 8,500 crores coming in, and as a result, you can expect some impact to show on the PAT as well, which is most likely to remain flat year on year. That 1% cut coming in is what the street is penciling in on a year-on-year basis. Now, when you take a look at advances and deposits, advances growth is likely to remain strong at 16%. Loan growth is likely to outpace peers as well. Now, SBI loan growth has been strong at 4 to 5% sequentially over the last 2 quarters. So we'll watch out for if this momentum continues. Deposit growth is likely to remain at that 10% year-on-year mark as well. Talking about asset quality, NPAs are likely to remain stable this quarter. Credit cost is also roughly expected to be somewhere around that 35 basis point marks. Now, what are the important things to watch out for? Is going to be commentary on deposit growth, agri book and its impact on the asset quality will also be important to watch out for. Implications of the RBI's new draft circular on LCR ratio. This is going to be one very important cue to watch out for, and what the management has to say about this in its commentary, and any view on direction and trajectory of NIMs will also be key to watch out for. So, well, yes, this is what the street is factoring in for SBI.
Okay, we'll watch out for SBI, and of course the chairman will join us at 2:15 p.m. tomorrow. So stay tuned to ET Now. Even on a Saturday, we have earnings coming in thick and fast, and we will be analyzing the SBI numbers for you tomorrow. But Rajat, what do you make of industrials? They had heated up quite a bit. Today, of course, Cummins is under pressure. The commentary from the parent isn't very impressive. Do you think it marks a reversal for some of these industrial names? Because even the allocation in the budget didn't really enthuse the market as such.
This actually, I can extend the point I was making earlier about stocks and sectors which look overvalued. Industrials and infrastructure as a whole is looking a little stretched. However, I will first give a disclosure about a stock that we've added to our portfolio this week, which is the Heidelberg, and it's a cement company. Cement as a business fits perfectly within my investment style. It's one sector which will never give you losses. Temporarily a stock may go down, but the long-term fundamentals are always good. Now, Heidelberg as a stock has a dividend yield of around 3.5% right now. And what I think a lot of people are missing, it's available at a price earnings multiple of 30. And, cement companies had a major dip during COVID when everything was shut. And since then, this is one stock which has improved its earnings per share. The EPS has gone up, and the recent numbers, they reported a 70% jump in their EPS to 7.3. And that's a very, very healthy growth. These stocks are trading at a discount. So this is one stock that caught my attention. And I felt this is somewhat missed by the market because, given the way they improved their profitability, it's a debt-free company. Cement company which is looking to expand, it beats me. So we've added that to our portfolio. Again, even if and they've been a consistent high dividend payer, even if markets were to fall, I don't expect this stock to fall as much. But overall, industrials and infrastructure, I look at the sector as one. I find most of the stocks like L&T and stuff trading at extreme valuations. There's been a lot of talk about Cummins. I've not really looked at deeply into the stock and why the stock, but for that reason, it'd be wrong for me to comment.
Rudra, want you to come in on some of these, cap good plays, right? L&T, Cummins, etc., especially the kind of weakness that we are seeing today.
Definitely, and avoiding these stocks, and specifically in the cap goods sector. So these stocks have run up too much, and at current levels, whether it is cap goods or even for that matter autos, is a very clear avoid. And you can in fact look at stocks where the results were good, and in fact these stocks are available at current market price much cheaper in terms of even valuation. Chart wise, they're also good. I can give a lot of names. For example, look at GAIL. The numbers were very strong, and GAIL at current market price offers a very good buy. Similarly, look at MCX. Numbers were very good. Again, stock is available at very good valuation also, and at current market price is a great buy. And even in markets like today, these are stocks which are showing relatively good strength. So you have to pick in you have to be very stock specific and sector specific. For me, private banks, FMCG, pharma, so these are IT for that matter. These are sectors where I will pick my stocks. And if I have to name some more, look at even Tata Power, look at even McDowell or your United Spirits. These are stocks which are showing a lot of strength, and relatively they are far, far better. So if I have to hide in this fall, I will go to these sectors and few stocks which I have named now.
Just taking a look at the market, because there's a further weakness that has creeped in the last 10-15 minutes. We were holding about that 24,770 mark, but right now we're at 24,730 thereabouts. So very close to the lowest point of the trading session, if not the lows. Actually, the lows of the day was around 686, which happened earlier in the day. But for now, at least, we are towards the lower end of that range. Kunal, what do you make of this, bout which is coming in further? Would it mean that this weakness will perhaps continue come next week also? And any BTSC trade that you would want to carry forward?
Yeah, I think the selling is probably because of the weekend, and traders would want to close on to the positions even if it was built on an intraday basis, because because of the uncertainty across the globe, and selling which is there consistent in the Dow futures. But in terms of BTSC trades, I'll still suggest to buy calls. The first one is Ban Kaplan Point. We were discussing this stock earlier. The stock breaking past about the 1600 barrier, coming back towards a new life high breakout about those 1600 levels. So would suggest a target of 1700 on the stock, and stop loss could be kept at the breakout point of 1600. And the second would be Ban M&M Finance. The stock is holding on to the 300 levels broadly, in even though the futures is into discount, but I would still believe that the stock is completing a breakout of a swing pattern as well as a cup and handle pattern on the daily time frame. So would suggest a buy with a target of 330, stop loss at 288.
Right. And Rudra, what about your BTST ideas?
Tata Power looks very good, and at current market price, it's a buy. Dips to levels closer to 440, 445. Even positionally, one can accumulate this stock. Looking at targets of 475 with a stop loss of 460. Manappuram is also another counter which looks relatively stronger to me. Buying with a target of 218 with a stop loss of 208.
Taken. Just wanted to flag out some of the other major events which are lined up in the coming week, and they'll be important to track as well. You have the Monetary Policy Committee meeting coming up, so the decision will be out on August 8th. That, of course, will chart the course for us, because the RBI commentary of late has been fairly important for banks and the kind of measures they have been coming up with. So the press conference after that will also hold the key. On August 9th, we'll get the AMFI data, or the monthly mutual fund inflow. We have been seeing a number of almost 20,000 crore a month. Does it increase? Is there any softness there? That is something to track. We'll get the SBI board fundraising announcement, which is expected to happen over the weekend. And then Ola Electric will list in the coming week. A lot of other listings also lined up. But of course, Ola is the one which the street has been waiting by for. So we'll watch out for that. Earnings, yes, there's going to be Divi's and SBI tomorrow. ONGC in the coming week on Monday. And then Bharti Airtel also comes out with numbers. So we'll watch out for some of those. But Rajat, wanted your take with respect to the earnings season so far. Yes, there have been quite a few disappointments, one can say, but has there been anything which impressed you particularly, any stock or any segment or sector?
Yes, definitely. Broadly, if you ask me, earnings have been, to my mind, the stocks that I'm looking at, whether it's ITC yesterday or Tata Motors and stuff, everything that I track and I have in my portfolio is in line. The thing is, oftentimes people try to buy stocks which, have underperformed or are not performing very well. But looking at Tata Motors numbers, I thought this is one stock we should add more of, because despite really, really strong growth in their profit, the stock is underperforming. And again, this is, one of those things that, it's not in line with estimates. But, I was just, in fact, looking at it right now, that their profitability has gone up from 60 crores to 30, from 3,200 crore to 5,500 crores. So, very strong numbers. They've got, pretty much the leading market share in category passenger vehicles. They've got 3 frontline vehicles. They've got, 5 more lined up, and that's about 14% of their revenue, the passenger vehicle category. I think that bit of the pie is likely to go up. So despite the run-up, the stock right now looks cheap. If you forget about what the stock has done in the last 1, 2 or 3 years, if you just look at the fundamentals in like a snapshot as it is today, it's trading at a valuation of around 13. This is the future. EVs are coming in. Their JLR business is doing really well. They've got electric vehicles in both Jaguar and Land Rover. They've got some 33,000 advance interest bookings in that. So everything looks very positive for the company. Again, the only down is the fear that everything is overvalued and could fall. This is one stock which is not overvalued, but given that it has such high weightage in many of the indices, it would probably fall in line with the markets. But this is definitely some stock. Again, to the extent you're adding incrementally into your portfolio, you should add that. If I may make one more point that I was talking about earlier. Why I was saying FMCG is something that we are very positive on, and we were talking about the MPC meeting. Of course, there's going to be no rate cuts at all. The food inflation is up some 12.5%, so that's not going to happen. I hope they don't increase the rates, really, to be honest, at this point. But this is a very seasonal phenomena around monsoons. The food prices go up, so there's food inflation. This would again help FMCG companies as we go into the later half of the year, as inflation stabilizes and their input costs improve. We have a sector which is already trading at very cheap valuations, and inflation is set to go down. So you can expect the second, third, and fourth quarter for FMCG companies to be very robust. So definitely look at buying stocks in that. Stocks, the ones that I've mentioned, we've added HUL and Asian Paints. Definite adds at this point.
You were talking about, Rajat, ITC, right? The stock that you were recommending just before that?
I spoke of 3 stocks, Hindustan Unilever, Asian Paints, and ITC, of course. ITC, again, reported numbers. They were pretty flat, as expected. But I think the big thing that will happen for ITC is that in the next 100 to 150 days, the hotels business will list as a separate entity. And we've seen whenever that happens in a company, there is some bit of value unlocking.
Because you are right there. Just 2 minutes to go before we wind down for the week and the day. I'm going to quickly hand it over to Snehi to wrap up the closing trades for us.
Well, yes, so let's take a look at what the market has panned out to be today. And, well, lots of red being seen on the screen. There you have it, Nifty with cuts of more than 1% in today's trading session at 24,720. Remember, just this week, a few days ago, you had Nifty crossing 25,000, opening above 25,000 day before yesterday. And see where that has ended for us over the week. 24,720 on the Nifty. Nifty Bank also seeing some pressure coming in. 0.5% lower is where Nifty Bank has also closed for the day. You have Sensex on the other side. 1% lower is where the Sensex is also all set to close for the day. And, well, let's talk about some Nifty gainers on the other side. Then you have DB's Labs, HDFC Bank, Dr. Reddy, Sun Pharma. Pull up all of these stocks for us. Nestle, Kotak Bank, Apollo Hospital. All of these were Nifty gainers. But, well, these were possibly the only positive tinges of green being seen in the market, because on the flip side, you had Eicher Motors tanking away in today's trading session. More than 5% cut coming in on Eicher, Maruti Suzuki, Tata Motors. All of them on the back of missed auto sales estimates. And you have Wipro, JSW Steel, Hindalco, ONGC, all of them down anywhere between 3 and 5% deep under pressure today. Let's also talk about some sectoral indices. Then for the day, you only have Nifty Pharma that has ended the day in the green, up 0.5%. On the flip side, you have Nifty Realty, which is the biggest loser, and does not come as a surprise because Nifty Realty has consistently been the biggest loser over the course of the week. 3.4% lower is where that index is. Nifty Auto, Metal, IT, PSU Banks, Energy, FMCG, Media, all of these indices closing in the red today. Let's understand what worked out for Nifty Pharma today. Granules, Divi's Lab, Dr. Reddy, Sun Pharma, all of these stocks did pretty well. On the flip side, you had Tata Motors down 4% in today's trade. So that was one dampener for the market today. Apollo Tyres, M&M, Madison, Balkrishna, all of them down today. And, well, sentimentally, auto sales coming largely mixed. Other than Escorts Kubota, all the others were either in line or missing street estimates. Escorts Kubota was the only one that surpassed what the street was expecting. But, well, big drop coming in on that index, that stock as well. 6% lower is where Escorts has also ended the day. Let's talk about some big newsmakers today. Then Zomato. Let's pull up a Zomato and see what the kind of move Zomato has seen on the back of very good numbers coming in yesterday and good management commentary coming in as well. 12% higher is where Zomato is ending the day. You have the Adani stocks like Adani Wilmar, Adani Energy also doing pretty well today. PCBL, JNK Bank, yet another stock to talk about. Very good move coming in on JNK Bank also today. On the flip side, you had Cummins, Escorts, Birlasoft, Emami, Capri Global, all of them tanking away in trade. Lastly, just want to flag off some brokerages that were keeping stocks on the radar this morning. Tata Steel, remember Investec had downgraded that stock. Just want to quickly see what Tata Steel is also doing. Tata Motors, Dabur, Sun Pharma, Lupin, all of these were stocks to watch out for on the back of their Q1 notes, as well as what the brokerages were flagging off. There you have it, 4.3% lower Tata Motors and Tata Steel also shortly on your screen. We'll just take a look at what Tata Steel has done in today's trading session. But, well, yes, overall 24,699, even below 24,700 is where the Nifty has closed today. And, well, yes, that's how we've shut shop for the week. Very volatile trading coming in, 25,001 hand, but, well, yes, 24,700 is where we've shut shop today.